Sign up today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 175, Nasdaq's up 9, S&P's up 7.5, gold contract up $3, trading at $17.53 an ounce. You get silver down 14 cents, $18.68 an ounce. Light sweet crude up 57 cents, $36, 1 cent a barrel. Notes and bonds, they got them flat again, folks. Notes and bonds have been going sideways now for 2.5 months. 10-year flat 139.10, 30-year flat at 179.10. And King Dollar, that hasn't been flat at all. Down 358 ticks, trading 97.471. King Dollar looks like it's going after the 94 mark, folks. It's broken this consolidation that was in for about a month and a half. The euro is at 111. The yen is out here at 108.31, and the British pound is at 125 to 1 US dollar. Tom O'Brien, what's going on?
Good morning. Hey, positive action, man. I think it's S&Ps. I think we're in the green bar 11 out of 13 straight days now in the S&Ps. Why not? 3,062.
No doubt. Sherwin-Williams green is the color of the day, and the NASDAQ futures, folks, we'll see what they can give us now. The bottom line is that they tested the highs of the lows, the lows of the highs. So the bottom line is that we got the test happening. Now the question is, what is the NASDAQ going to give us? That's the name of the game here. Let's go over to our man, Mr. Kevin Inks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. You want to understand the option market, option strategies, futures, outstanding program. If you haven't test driven yet the Thinkorswim platform, easy to do. You're sitting on the site, hit the button, bring it up. They'll allow you to trade with paper money each and every day. And as Tommy was just doing that news, the bottom line, they have a great platform, folks. And when we start talking earnings and we start expected moves, that's Zoom, $25, man. We're going to see some action out here this afternoon. Kevin Hanks, what's going on?
Hey, you guys just buried my lead here.
Oh, I'm sorry, man.
Come on.
But you're the one that knows it upside down.
It's pretty predictable, right? When you see movement like that and earnings coming out in Zoom, you know we're going to cover it today. That's what we do. So I'm just joking. But, we're going to cover Zoom today on the show, both from a trading perspective, like Folio's going to cover it in terms of social media. We're going to take a really hard look at this name that, if you look at a chart, it looks like a hockey stick.
Yeah.
It's straight diagonal upward. And we're going to see, how exactly we can try to tame this beast with some trades.
Kevin, when we're looking at the expected move on the platform, the TD platform, right, how does that expected move get calculated?
Well, it's the one-day move.
Okay.
That is based on, when I was trading, we would do it basically paper napkin way, which you take the at-the-money straddle,
yep,
and then you look at about 80% of that at-the-money straddle.
Nice.
And that gives you a pretty good indication of what the one-day move is. Now, they use the one-day straddle, the at-the-money straddle, the out-of-the-money strangle, and then it's put into a calculation that derives the expected one-day move.
Pretty cool, man.
If you look, the 4-day move, the 3-day move now, the move through the end of the week in Zoom is $29.34. The 1-day move is $25.12.
Yeah.
So now you see what it's event premium. That market maker move that pops up on the Thinkorswim platform, you can't call it up. It only emerges when the front expiration implied volatility goes above the second expiration. And right now you're looking at 168 in the front expiration, the June 5th, and the June 12th is 122. So that's what causes that market maker move icon to appear on the top of the page. And it shows, and someday it shows when there's, expectations of some type of an event. But when that front month implied vol gets jacked up, like it is in Zoom, that's when that appears. And it's the one-day expected move for the event.
That's so cool, man.
I think that's one of the coolest parts about the platform that I'm always pulling up, man. It really is, especially at earnings.
And what happens? And what happens, folks, when you're listening to Kevin's program, right? This is what's so cool. You're doing strategies around your probabilities of the move. So whether you're a bull or a bear, that's up to you, okay? But that's what's so cool about this, Kevin. And folks, if you haven't test drive the program, the platform, just do it, okay? Because as Kevin was saying, you have the move today, okay? But chart-wise on here, they trace out, like when you're buying or selling or doing spreads or whatever you're doing, these curves that are out there, man, I mean, you can look out pretty far, pretty forward to understand at that point when you're putting a trade on where that trade may be in a week or 2 weeks or 3 weeks, okay? So
hey, guys, there's an important detail to the market maker move and the expected moves in the right column of the Thinkorswim platform. And that is, if you look in front of that number, it's a plus and a minus. So that expected move is in either direction.
Right.
So we're not giving you that market maker move is not the answer to the test. It's part of the question.
Yes.
The answer to the test comes when the earnings come out, when the event happens, and the movement takes place. So what you're betting on when you're trading around is that expectation of 24.85 now as we speak. It's ticking in real time. So that's what you're trading. Do you think it's going to be bigger than that move or smaller than that move, and in what direction?
Yeah, pretty cool, man.
You know what's crazy? Just pulling up the chart, $25 seems pretty affordable when it's up like $25 in the last 24 hours, right? From 180 up to 212 to 205. So that'll be cool to see what you guys do for trades, see what we put on, and then, of course, their earnings after the bell.
Like riding a wild tiger, Tommy.
Oh, this market. You evidently have a wild tiger, man, and it's just clearing away the bushes, man.
Yeah. I mean, this. I imagine that this market and its resilience and its movement and the fact that the VIX is still around 28 has got to be very frustrating for some bears out there because you're just not getting the sell-off that they were hoping for. And when they do, they're bought much quickly than everyone thinks. So, go ahead.
And what you can see that because, this morning on Tommy's program, like these healthcare companies, and the Journal this morning, they have the amount of health dollars that actually came in these healthcare companies that already have billions of dollars. So, like, I looked, I says, well, okay, man, they got to put that money to work. So that's like free money that they got. And it's billions, and so of course they're going to put it to work, right? So it's like pretty amazing when you actually think about it. You know what I mean? It's like, yeah, we've had the COVID, you've had the unrest, you've had all this stuff, but you also had huge chunks of hundreds of millions of dollars go into large companies that evidently they're putting it to work. That's the bottom line.
The bottom line is I think the U.S. consumer is flush with cash.
Yeah.
The saving rates, did you see the article that came out about U.S. savings rates?
Yes.
As a percentage of disposable income? That's the highest level since 1960.
I know,
like 33% or something, yeah.
Unheard of.
Yeah, 33%. That's right, Tommy.
Amazing. Kevin, you have a great day, safe day. Of course, we look forward to the program in 45 minutes.
Zoom.
Thanks for having me on, guys.
Absolutely.
Thanks, Kevin.
Stay right there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow is up 168. NASDAQ is up 5. S&P is up 8. Let's go to Steve in Maryland, Tom. Hey, Steve, what's going on?
Hey, Tom.
Hey, Steve Woods, what's happening, man?
I'm looking at, last week when I called in, Tom, we were talking about breathing.
Yes.
Deep breathing. Well, the very next day, NPR had on Fresh Air afternoon radio show, they had a whole piece on deep breathing.
Oh, that's cool, man. That's a great show, too. That's a great show. I love that show. Yeah.
So it felt like a little bit of a synchronicity. Well, I've been looking at a stock since then, and I've been wanting to talk about it. And it's got the symbol RIOT, which I guess we would say is a little bit of a synchronicity, too. But it's blockchain, RIOT blockchain. And it's another one of these that where the float is turning over really rapidly, which totally fascinates me. I've been taking Steve Rhodes's classes, and I'm actually, I got in yesterday based on some of his ideas, and this thing just blasted off today. So my question is, where do I get out of this? Where do you see as a target on this?
So you get Riot Blockchain. Okay, folks, this is they operate a digital currency company, and of course, if we go over to Bitcoin out here today, you see Bitcoin just blasted through the 10,000 level, folks. Okay, so Bitcoin is driving all of these things. There's no two ways about it. We just went from 5 days ago, Bitcoin was at 8,700 at 10,167 today. This is an ABC structure up, Steve. So I know you're not going to get married to it. Bottom line, though, is that it's blowing away the B point out here today. So you got the B point's 275. Your A is 103, so you got about, $1.73, which is going to get you like 370, about 365. And right now you're at 2.
That's where I got it, too.
Yeah.
That's where I got it, too. And, last week when we were talking about Tilray, I found that really helpful, Tom, because it clarified something about how you were talking about when they're shorting companies, they can turn it over faster than the float.
Yes.
And
That's you know why, right? Because they're shorting something that they don't even have, so it's more than the float.
exactly,
Right.
exactly. So, but here's the funny thing about that. When you look at Tilray, I use a Schwab platform, and their number for the float is 35.8. If you go over to Yahoo, it's 81.45, and on your Bloomberg, it was 98.7. So, you know, one of the premises of the ideas of my book is that the float is it's, you know, I made a huge mistake in my book because I said that price and volume and float were of equal importance. And obviously that's wrong because price is more important. It's like price is king and volume is queen. And but I think the float is like really important out there, and time is somehow like the spirit, or you know. But in any event, the question, you know, it's like how can different platforms say the float is one thing when it's
I'm looking right now, Steve, and what I have to find out is that I remember this before. I got to find out again what it is. So shares, we have two different numbers here. I have 108.2/91.7. So I believe.
So that's a change from last week.
Excuse me?
That's a change from last week.
Oh, yeah, they'd always change, though. It can change because one has to do with the amount that is outstanding. Then another one, I believe, has to do with the ones that actually are tradable. And
right.
I'll try to get this answer.
Change daily, then?
I'll try to get this answer today as to the two separate numbers here.
Yeah.
Because you can see that it says shares float, two different numbers, percentage of float, two different percentages of the float.
Right.
Yeah. So because
and
you can have
your audience to know. I'm not trying to pump my book here because you can get it for free online. Somebody just posted it as a PDF. I wasn't smart like you and published it. You published your book by yourself, I think. So you know, I'm just fascinated by the whole process, and I always thought the float number was sort of a solid number. But what I've learned from you now is that it's changing every day.
Yes. And the biggest thing, though, I would say, is the aspect of what we talked about, that when you have a short position that people are shorting, and that's why the CEOs go out of their mind, they're shorting something they don't even have. And
right.
the SEC hasn't been able to get a handle on it. That's the real bottom line, even though there is a law against it. Because they publish it. This is what's so crazy. If you go over to the NASDAQ site, you're going to see how many days overdue equities that haven't been brought back. Some of them are 35, 65, 85. That, you know, they say, okay, we haven't got our shares back, so that's, you know, that accelerates the whole deal.
Right.
Yeah.
Just to add, Market Watch, they have the same numbers as Bloomberg. For the public float, 91.6 on Tilray, and for the shares outstanding, technically at 108, but there's a public float of 91.6 is what they call it.
Oh, perfect. That's what it is. That's what I was looking for, Tommy. So what that is this. That's so let's say that Tommy, you and I, Steve, own the company, right? One is the amount of shares that are out there that are issued. The other one is what we've let go. So those other ones at the beginning are in the treasury, and in the company's treasury. Then they let them out, and so the one you really want to pay attention to would be the second one that is in the public float. That's how that works.
Sure.
Yeah. Cooking,
Right.
brother.
All right. Thanks a lot, Tom.
Have a great one, man. Have a safe one.
Thanks, Steve.
Let's go over to that NASDAQ, Tom. NASDAQ looks like, let's see if it's going to go try to test this high up here again. So pre-market, folks, let's see. Pre-market, what the NQs did is that they did go up. Oh, they got a long way to go for that. Interesting. Okay, yeah, no, they're not near that yet, because we had the test was 96.67. We went to 96.70. Right now you're at 96.08. Yeah, and that's what that is, folks. Is that is the low of the high of the 19th of February, 97.67. Oh, that's not even a high. The high is actually 97.80. So we've been into this. We've been to the low of the high for quite some time, actually. Yeah.
Right up there, man. And I was mentioning in my program, not hard to imagine a world where the 100 biggest tech companies benefit from an acceleration of working from home, remotely, collaborating in all those ways. But to imagine that the 500, companies in the S&P, that all of those companies, that we could see the S&P at all-time highs with everything going on, with the slowdown of COVID especially.
Right.
That one is just tough from a fundamental perspective, let alone the charts, to see how that works. I mean, they had Slack, I believe. They got an upgrade today. I mean, this chart, man. How about Slack symbol work?
Yep.
From the lows of 15, and we're up 1.2%. We're as high as almost 38. Those types of companies, man, just remarkable runs. And you're seeing, Microsoft has, Microsoft Teams, right? Google has Google Hangout or whatever it is. They're all up there. Yeah.
If you didn't know better, folks, you'd think you'd be listening to a penny stock program here when things are up 200%, right? In 2 months.
Right. Yeah, but they're billion-dollar companies doing that. Exactly, right?
Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 230, Nasdaq's up 20, S&Ps are up 14. Let's go into the NDX, Tom. Take a look at what we have moving the NDX first. You get Align Technology, that's up 4.5%. Dollar Tree's up 3%. You get NXPI up 2.5%. taken away from it. Citrix is down 2.5. You get Autodesk down 1.6. Alexa Pharmaceutical down 1.2. So let's see. One of the tigers want to take a look at AA. What do we got here? So this is Alcoa. Low for the is $5. High is 24. It's kind of bump up here today, 50 cents. That's a big number for that. So, I mean, can Alcoa, go test 1067? Yes, that's for sure. I mean, that broke out of that. It's a high volume spike. I suspect it's going to get up there. We put this on a longer term basis. This stock's been a dog forever. And, you can, I wouldn't get wrapped around the stock. See, the thing that's amazing about the aluminum business, folks, picture this. I remember when I first started the Gold Report that when I really didn't know fundamentally a lot about how aluminum is made, all of the above. And I was always in wonder, okay, why can't aluminum move? Well, that was in 2002, and what was happening is that, the energy market going up, they're always blame it on the energy market, that it takes so much oil, Tommy, to make aluminum, it's insane, okay?
Okay.
Energy. Now look at it. It's $10. Well, guess what? We know that oil has been dramatically low for a long period of time. So what is their excuse now? You know what I mean?
Right.
That's
right.
Okay. So yeah, you get a good trade on. There's no doubt about that. That's a nice pop, and I suspect we'll go a little bit higher, but don't just leave it there. That's what I do. I basically leave it at the door. So what else we got happening?
How about we'll pull it up? One of the articles I had, cannabis. I was just on the Yahoo Finance pages early today, just checking out what was going on. There are actually two articles talking about canopy on the front page. One of them I found interesting, talking about the beverage business. Now, Constellation, of course, a huge investor here.
Yes.
In Canopy. So Constellation, 38.6% they have. They have an option to own up to 55.8% of the company. And this is talking about, so just in March and April, the beverages, Tweed, Houndstooth, and Soda. I don't know about these names. And Tweed, Baker Street, and Ginger shipped in March and April. First two drinks and zero-calorie cannabis beverages with the backer of Constellation, which is Corona, along with many others. And there's kind of a picture. So I wonder how that, now this cannabis in Canada, but they do talk about that they have the ability to, through somebody else, who are they, Acreage Holdings.
Yep.
So Acreage has the right to bring their products to the U.S., at least now, before that becomes. But that's something you're going to see. Drinks, which are not out yet. They're the first major brand in March and April. I really wasn't aware of that, as in they're just rolling out, and of course with COVID shutting everything down in March and April. But they talk about, you've seen the huge rise in alcoholic spritzers, right? Those Truly, what are the other ones? The alcoholic spritzers now, they're huge, and zero-calorie type beverage. Well, this is going to be a similar deal. So I wonder how, as things change, and we've talked about, maybe in one of these bills, you might see the ability to have an advancement, maybe take marijuana off Schedule 1, allow for, banking, allow for all, and you could see a huge shift pretty quickly if that ever came to be, which is a possibility for sure.
No, there's no doubt. And I guess, I mean, the reality in the U.S. is that it's just a matter of when, not if, that you'll have those Tweed drinks inside a 7-Eleven. And what Tweed is, so check out this out.
7-Eleven. I think we have a little ways to go.
We do. But you're not going to sell them. If it's in a dispensary, I can't picture people going in and saying, "Give me a 6-pack of drinks in a dispensary." Do you know what I'm saying?
Oh, see, I can. Okay.
So the Tweed deal, and they got to change that name. The Tweed deal, that was the first one. What happened to the guy that started Tweed? Actually, they turned that into Canopy. And I think the Canopy name is 10 times better. Do you know what I mean?
I agree. I got a picture of it up there. It's Tweed. You can see it. I like the graphic, but the name itself,
exactly.
It does not roll off the tongue, man. I am not a marketing professional or genius by any means, but Tweed, Houndstorm, and Soda.
Houndstorm, oh my
Something
God.
like that. I don't know. That's, you know.
I think they better go get the marketing, whoever did the Marlboro Man and the rest of this deal when they got people addicted to cigarettes.
The way I imagine it, right? I imagine it like a package store, to use the Boston term, right? You know, you just got your package store, man. You get your package store cannabis. It's not going to be mixed in with your milk, bread, and cigarettes at 7-Eleven, but it might be the package store that's right next to it, and you roll in and for states that are recreational,
right?
That's how I imagine it. It's going to be separated, you know, but it's going to be separated in a pretty casual manner when it's recreational, and you'll see that hit states if they take it off the Schedule 1. And you can have, you know, I've talked about some of my friends in credit card processing. They deal with it all the time, trying to have cannabis dealers out in Colorado. They've been dealing with it from the get-go. For a while, they were able to do it. These big banks squashed them, man. You can't do that. You cannot facilitate credit card payments or payments of any kind for these people that use cash. You could see a huge explosion as that U.S. environment. And that is a matter of time, not if, but when. And probably sooner rather than later.
And there's a problem also, you know, in St. Pete, we have one of the largest CBD distributors out here. And when I'm at these chamber meetings, I've met the guy, young guy, but maybe 10 years older than you. But anyway, he was telling me.
I like that we'll call that young. I'm cool with that. Okay, go for it.
And what happens, so picture this, folks, okay? So you have plenty of bankers there, and, you know, the guy was talking, we were just having a beer talking, and he was explaining that every 2 or 3 months, man, the banks kick him out. Now, this is CBD. This is not even, this is the CBD, because the banks don't even want anything with CBD. He grew so quick that it's millions, and they don't want nothing to do with it, just in case at some particular point.
It's not worth it to them, right? For the amount of business they do, that sliver of business is not worth it. For that industry, it's worth it because it's the entire business, man. And, you know, so if this happened, if they took it off of Schedule 1, which is really the next step, and I believe there's pretty much bipartisan support for something like that. Hopefully they get it done. The states that it's legal, you'd see a pretty quick transition to banking, to operation, to companies that are public in Canada rolling in pretty quick.
Yeah, there's no doubt.
It's kind of cool to think about if that happened, how you'd see some of these, accelerate in a huge way.
Yeah, big time.
Yeah.
So, market-wise, you know, going sideways again. You know, the NASDAQ tried to make another run for it. The bottom line is that, you know, we'll see how this baby shakes out the rest of the day. But, you know, yesterday was just sideways all day. And then the bottom line, when all said and done, though, guess what? You had the S&P at a higher high, man. I mean, the creeper was out there, man.
Hey, how about Penn Gaming? Can you jump over to them? PENN.
Yeah.
So we talked about cannabis. We'll jump to gambling. Gambling and drugs. Why not, man? How about this acceleration from 40 down to 3 up to 31.42? Penn Gaming in the press a lot recently for purchasing Barstool Sports to the tune of like $500 million. But, man, look at this opportunity. You know, I mean, as long as they weren't going BK, man, the owner of Barstool Sports in an environment where online gaming's legal, the stock market, you know, is volatile as can be. People are at home all day, and look at that pop, man.
It's up 10 times.
Tenfold almost.
Tenfold.
Seriously.
Stay right there, Tommy and I come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow up 214, Nasdaq's flat, S&Ps are up 12.5. Let's get over and take a look at Barrick Gold for a couple of targets and the YouTube folks. So the low for the year is 12, the high is 28. You're trading at 24.42 right now. And this target is looking for a stop, and what he thinks is going to happen here. So, I mean, realistically, you have to put a stop under your high volume spike here. I mean, this thing spiked down. I don't think it's going to go down that again, but unfortunately, that's what you're looking at. And I suspect this is going to make a run for 28. 28.50 is the number up here. So
quite a run from $12 to 28, man. Those gold stocks, when gold rocked, amazing moves there on some of those equities.
There's no doubt. And, you know, guess what? We've still been going sideways, which is pretty wild. I mean,
sure.
One of the real questions are going to be, you know, does this thing really fall apart? Meaning, you know, the dollar. You know, we're at 97.505, and what's glaring at us is, you know, 95 to 94, which is the last low that was out there on March 9th. So we'll see how that corresponds and whether the market likes it or doesn't like it, you know.
Yeah.
So we're going to, let's see, today's Tuesday, we get to oil tomorrow, right? They want to look at that natural gas also. So let's go over and look at natural gas.
Cool.
Natural gas. Let's see what we got here. So you're at 179. This is a tough one, man. You know, I mean, when you think things are inexpensive, folks, okay, they just keep getting more inexpensive. You know, you know, looking at this, I should be able to get a bounce, you know, but my take is I'd leave natural gas alone. I think this is just too hard to trade. You're in another zone now. As soon as you got below the 182 again, that gets you bottom line in a whole another range. Let me put it up on a continuous so I can see what we're looking at. And these ranges are important, folks, because it's really tough to get out of them, man. I mean, that's the problem. Okay, so I'm going to bring this back like 15 years.
Okay.
Well, let's see. So 161. Well, I guess no. On a longer basis, it's still in the range. It's a range between 150 to 190. That's what you're dealing with here. So, yeah. Can it go to 211? Yeah, it can. Pretty wild though, man. I mean, we have so much energy. It's pretty amazing, right?
It is, man. I know that spike when I pulled up natural gas. I mean, you see spikes to $4, $6, $10, $15, man, crazy.
Listen, when I used to trade natural gas, I traded a lot, folks. The margin was $10,000. Let me see what I bet it's only like $1,500 or something right now. I bet because that's the type of moves that it used to have. That's why they call it the Widowmaker too. Bill, trust me on that. It's like so. Oh, I've hit the wrong one. NG.
It's all right. I mean, I saw, it had some runs when it was peaking out in 2004, peaking out in 2007.
Yeah. The margin now is only 2,200.
Okay.
But that's relevant because guess what? It's at $1.70 instead of $15.
Exactly. Yeah.
There's no doubt. The NQs. See, these NQs, man, they're giving it up. I think my take on this, folks, is that the NQs really gave us a heads up when it actually made the test on the 26th of May. 26th of May, we got the 96.04, and then the following day, when we came down on volume there. So we'll see. But that was a big number. And then, of course, it just snapped right back, man.
Hey, how about Lululemon, man? Athleisure, everybody working from...
Yeah, that's all you're wearing at home, I heard.
Working from home, it makes sense, right?
It does.
Nobody's got to be in the office. Offices are no longer going to exist. People are going to remote in. And... Shirts are the only requirement, and athleisure is in, man. But from 128 to 306, they got a downgrade today. Just saying, it's the run has been a little bit much at this level. But
isn't
remarkable.
This extraordinary though? Like, okay, so picture, Tommy, you are a teacher right now, professor at MIT. Okay, I want to know how you're going to teach someone fundamentally that on March 18th. Lululemon was trading at $128 and a good company, and today it's at $306.
Yeah. Fear is quite an emotion, man, and it makes you do irrational things at times. Would be one of the points that you should probably...
you know what? I'll come to your class.
There you go.
No, seriously, man. That's...
And you can't fault anybody if you're in a period where you're very close to retirement, this is a black swan event, right? That we've never seen before.
That's correct.
We weren't sure that, because things do look pretty good right now, even as the economy opens back up.
Yeah.
Things have been good. You didn't know if this was going to spread rapidly, and maybe the market was going to see a collapse like we had never seen before and not come back for 5 or 10 years. So that's probably what drove people to really get irrational, because the leaps down. I mean, look at the gaps on this chart as the market traded down. You were losing, $20, $10, $15, $20 in between a bar over and over and over for a period from February 21st for a full month until you got down from 260 to 128. But now the other side of that, like you say, a company like Lululemon that was not going away, right?
Right.
Definitely not going away. A staple of consumers everywhere, premium brand, not going away. In the long term, probably going to be okay. And then you add to that people are going to be in a lot more athleisure when you're at home, outside, doing all those activities. It seems almost too easy, but it wasn't.
And what may be happening, man, between the stimulus checks and, unfortunately, the folks that have lost their job, there's still like over a third of them that haven't even got their first check. But guess what? When people start getting checks, they just might say that, hey, I've never had a chance to get a Lululemon. Maybe I'll, spurge $100 or, whatever these things cost and get one for myself,
Yeah. So enough people are saying that. That's for sure, man. And, the other side of that, too, is that we've seen a separation from, high income earners and low wage earners in terms of high income being able to basically a much easier transition, on average, to working from home. And maybe that's the consumers that Lulu has. I was thinking about this earlier, right?
Yeah.
They're dealing with more affluent consumers. Obviously, if you can spend $100 on athleisure, those people in general, more able to work remotely, work from home, maybe have a greater chance of not being furloughed or coming back. And maybe that's a combination of things, because, a company like that to almost, you're talking about 2.5 times the price in the span of 2 months.
I know. And there's something about the name and the brand that are solid, man. I mean,
their product is well made, man. It's a premium product compared to, things, but it better be for $100 for athleisure wear of pants and shirts.
Totally, man.
Yeah.
Stay right there, folks. Tommy and I come right back. We have the Dow. The Dow is up about 135. Nasdaq, in the red and down 46. S&Ps are up 2.5. Gold out here flat 1750. Silver's down 24 cents, and good old King Dollar down 300 ticks. Get a little selling out here inside that NQ, man. Come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, bam! As well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that will take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 150, Nasdaq down 36, S&P's up 5.5, and Dick's, right? Dick's come out with numbers here.
They sure did. So they lost $1.71 a share. They were looking for a 57-cent loss. Revenue and comp sales also missed, but the thing in the positive side here, a little bit of volatility. Dick's right now, I think it's, positive by 1%. But they had said e-commerce sales surged 110%.
Wow.
And the biggest part about this, I think, the retailer added that the current quarter has gotten off to a strong start. That's what you want to hear, right? Things are jumping back. You see the volatility, though, from 38.40 to 35.50 about. The conference call beginning at 10 o'clock when we came on the air. We're down a bit from there. Right now, up 34 cents at 36.80. So pretty much in line, but that's what you like to hear when, this quarter up to a strong start. E-commerce sales. That's not going to change. Like I told you, I picked up a pair of sneakers over the quarantine period at Dick's. They had curbside takeaway. I'm now in that ecosystem. I'm now aware. If I need something, I can pull it up online. I can order from Dick's, even if it's not curbside takeaway. It's super simple. Order it, pick it up. I'm on their website, right? I wonder how that plays out in the future.
That's intriguing, huh? Particularly because it's a large, big box store. I wouldn't think that they were so up to speed. They should be. I'm just saying it's just that it never...
They had a great process, right? Yeah. You got your order number, you got an email in there. You could either hit the code and write on the website, put in your code, they know you were there, or you pull up, you tell them you're there. But I had already hit the button. I didn't do anything. My only interaction was them walking out with my order out the door. Pretty cool.
Really? Wow.
Yeah.
Wow. Well, it's impressive, man. Particularly because the rest of those big box stores, Costco and BJ's and all that, they're making it. But retail-wise, I mean, forget it.
And hey, how about we end it with Zoom, because it's been zooming south, man. We're down $12 basically from the open. We were up to $212.80. We were just under 200 briefly, and that analyze tab, we're now at only $21.
$21 move.
That's
expected move. Stay right there, folks. We're going to think of something coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave. Wait, I'll be back this afternoon. Thanks, pal.
Thanks, man.
Bam!